Hi, welcome. I'm Adnan Raj and I'm joined by Kevin Sebastian, a good friend and a client of mine.
Thank you for having me.
Pleasure's all ours. So, Kevin, I wanted to ask you, what is your definition of money?
It's a bit of a long-winded question. I mean, money can definitely, for me, I would say is more to do with how much physical, if you're going for the pure definition of like,
To you, what
Yeah.
it means to you.
it's basically an ability to exchange for goods and services. And, I can give you the textbook definition of that. But from a financial context, I think definitely money is things which are having some sort of physical, tangent in that sense where it's an asset. It's something that you have to keep for saving for a rainy day, for investment purposes. That's what money would be for me.
All right. So, I'm glad you brought up investments because what is the one mistake you have made in the past with money, and what is something that you've learned from that?
I think the biggest mistake I've made is having a lot of money in terms of keeping it.
That's a good problem to
having
have.
having a lot of money kept idle in your bank
All right.
is what you're going to do with it, right? Like I think for me, because we come from an age of generation where our parents have raised us as such, saying that the more money you have in your bank balance, the more you save, means you can basically tackle whatever challenges come forward in the future. But I also have realized from a very the longer we have worked and the longer we have seen the powers that be and the world that has changed fundamentally around us, is that having money sit and not work for you is one of the biggest mistakes I think I've made.
So where's this money sitting? In the bank?
In
You
your
mentioned,
savings account.
But
Just
where
pure.
else?
Pretty much that.
Okay.
But off late, and I think this obviously comes with talking to people like yourself and having conversations where people are also fairly smart with their money, is that they use their money to also say like, oh, how can I make this money work for me in the decade to come? And not having a lot of it necessarily is a good thing, but that money should be spread across in different investments and different assets. And that's, I think that for me is something that I want to work towards now.
When did you get to this revelation that it needs to be working and not sitting in the bank?
I think the pandemic honestly was a very eye-opening time for everyone, especially for a lot of 90s kids or the millennials who were just getting into the workforce and turning into their 30s, but they all entered their 30s in this year where we tend to draw a blank and then suddenly see, the real estate market crash. Every industry suddenly went on a standstill, but you were expected to pay your bills regardless of the fact. Mm-hmm. And I think from that point on, people start to realize working your 9 to 5 for 20 years, getting a gratuity is not necessarily the end all solution. And then you're not going to have a nice nest egg by the end of it. Not like, our previous generation or the Gen X, the Gen Xers or the boomer generation before that. But it's not easy now to essentially buy property as it was, say, 15 years ago. And again, federal interest rates have, it's been very volatile as well. And I think a lot of people now are starting to get finance savvy is the term I want to use, and understand that, yes, we need to start putting our money in places that will make us, comfortable in the years to come for periods of uncertainty.
All right. And that brings me to my next question. What is your take on debt as compared to the market and the circles you move in, your social circles, everything that you see happening with people around? And what is your take on debt? And what do you think would be the driving factor for that kind of rise in debt that people are having nowadays?
I think a lot of people have gotten very comfortable with credit cards in the circles I've run in, not me personally, because again, I obviously don't believe in credit so much, but then again, there are also other people who use credit to their advantage, where they use credit to pay off certain things, which net them points on their credit card, get them better services. The more you use your card, the better you use it for. And there's some people who are very, very smart, but then there are others who think like the credit card is, the golden goose, and using that as an excuse to basically rack up, tens of thousands of dirhams or dollars in debt just because I will figure out a way to pay it off later. But when you don't pay it off later, then comes the problem.
Kicking the can down the road.
Pretty much. Yeah. Like it's a problem for future me, or, in that sense, I would like to say that I tend to avoid these kind of circles when they bring up such kind of conversations. Jokes aside, but I genuinely think that a lot of people now are more, I would like to think, are more smart about this. And
I'd hope so.
Yeah. And I think that a lot of people also, for the same purposes, are also very risk aware of, taking on a credit card, especially now. In fact, if you look at it, look at it from like a very sales point of view right now, compared to 2 years, like before pre-pandemic times, or just even 2001, 2002, I would get calls to sign up for a new credit card or a new service. Those calls have primarily reduced drastically. I get them maybe one in every 6 months now. Mm-hmm. And even like my own bank, for example, stopped calling me for that very specific purpose. And I'm starting to see that as well as a trend. Like I think even the banks are saying that maybe let's not push credit cards right now. It's an observation I've noted. Again, it might be very different for other people who are constantly being told to get a new credit card. And which then comes to my whole perception of debt, because debt in itself is something that no one wants to have debt. Like in an ideal world, it would be great to not owe someone or an institution, money, which can then rack up over time. So for me, it's pretty much the concept is if there's any debt that's incurred, pay it off quickly, so it doesn't become a problem later on.
But wouldn't you say that having good debt is better than having bad debt? What you're describing is bad debt.
Yeah.
But we have something called good debt.
Yeah.
So what do you know about good debt?
I think for me, a lot of education has not been done yet on what good debt is, honestly. If you're looking at, say, for example, buying a house, putting it on a mortgage, paying it off over time, again, you've got the house, you got the investment, and you're paying it over time. If that's what you consider as, quote unquote, good debt, maybe.
No, I do not. Because till the time the house is in the bank's name as a mortgage, the bank owns the house, not you.
Yeah, exactly.
And no matter any adverse calamity, anything from a redundancy to not having a job or the company just up and leaving overnight, and all of a sudden, whatever you've paid for that property, the bank takes over.
Pretty much.
And all the money that you've paid into it is gone. So the definition of a good debt would be to have something like a continuous asset that gives you a recurring payout, dividend.
Yeah.
Right? And that will offset any sort of liability like property mortgage or even a car loan EMI or even your credit card for that matter. So anything that's paying you a residual which is over and above what the interest rate is and your principal amount, that is considered a good debt. So like you said, the literacy on what debt is and how to classify good debt from bad debt is the key driving factor which people are unaware of. So that being said, I'd like to come to the point where what sort of instruments would you feel would contribute to you building an asset or something that gives you a continuous residual income?
I think in terms of instruments, by instruments, I'm assuming you're meaning the methods of how we communicate this to people.
By instruments, anything. It could be things investment based because investment yield return. That's a concept that everyone's familiar with. But what investment, where to put it, how to manage it, all of that. So what would your advice be to everyone listening out there?
So my advice is obviously based purely on the industry I work in, because I work in tech.
Okay.
And part of what I've seen the trends in terms of where development in technology is going is that invest in technologies that are going to be relevant 10 years down the line. Invest now so that by the time they are coming to fruition, you have essentially, been a part of that success. And then that success comes with dividends of its own.
Okay.
But that is also a caveat to that, because anything can change within the span of, say, for example, minutes. In fact, DeepSeek's AI announcement necessarily wiped off 500, like close to like half a billion, I think so, from Nvidia stock. And a lot of people have been told buy into Nvidia.
Mm-hmm.
And I know I'm diverging a bit from what you've asked me for this question, because that's essentially a lot of people are now getting to the stock market. A lot of people who are looking at reading up and watching finance broadcasts, like much like this one, and understanding where best to put their money in. And the other side to this is that for people who grew up here in Dubai, who had parents who also came here in the 70s and the 80s, their first instinct is to put your money into real estate. Whether it's in your home country or here or wherever else you want to invest in. And a lot of the other, goals, I want to say, is that you look at immigration, you look at investing in another country that gives you residency as well. And I think those are like, ideally the places that I would look into putting my money in.
Right.
It may be a convoluted thought process, but it's the one that, we have immediate access to. Because if you look at it, financial literacy is never taught in schools.
Correct.
Up until you actually enter into an accounting degree, or even then, investments and corporate taxes and all of these things do not get discussed until you leave university, until you start joining the workforce, get a bank account, take a loan for your business. And I think a lot of challenges are now there that people don't know what to do with their money, especially for, the next generation of users or people who want to you put their money into something, but they don't know what to do it because they're too busy paying, the bills. So they won't even think as far as, oh, okay, I'm paying the bills right now. This is my current paycheck to paycheck lifestyle. But there's no one telling them. And again, no one's telling the next group of 20-year-olds, 30-year-olds, telling them, hey, you need to put at least 5% of your savings into something. What that something is, obviously, is, up in the air.
Which is why when you said that invest in tech,
Yeah.
based on your field, your expertise, how?
So the easiest way is obviously putting some money into the stock market,
Okay.
and investing in stocks for technology.
Okay.
And again, hit and miss, because what you do with that money is considered you're not going to get that money back. That's how I operate on that assumption, that when I'm investing something, I'm not going to put all of my savings. I'm not going to go all in. No one does that. That's like putting playing all of your cards in a poker game, which is, it's
High risk
basically
gamble.
it's a roulette. It's basically roulette, and you don't know when you're going to strike it big. And then when you do strike it big, human tendency obviously works out in a way that, hey, if I did it the first time, it's going to be successful the next 10. And I think that is obviously one of the more I wouldn't say dangerous, but it's a gamble at the end of the day. It is a gamble. But at the same time, for people who are not in that sector, who are not necessarily part of that world, they wouldn't even know where to begin.
True.
And I think I'm lucky based on the fact that I grew up, I essentially grew my career in this industry. But at the same time, it's not the end-all solution. I still think it's not the end-all solution, because companies can change overnight. Anything can happen. But say, for example, something more long-term, something more less risk, and not as substantial as a massive reward, but it's still essentially an asset. Say, for example, real estate. But as we've known, even the real estate market is not foolproof. So that then leaves the grand question that we ask financial advisors all the time: how can I put my money into something that I know will work out eventually? There's no 100% certainty, at least in my head. We don't deal in absolutes, obviously. So
True, but then again, the saying goes that no risk, no reward. So
Yeah.
the risk factor is what drives the reward.
Yeah.
Now, what would you say would be the most non-negotiable trait that you need to have in order to reach a certain goal financially? What would your experience tell you that you need to have, basically?
I think at least for me, because I understand there's obviously risk can be, it can go upwards. You want more money, there's obviously a certain inherent amount of risk that you go with it. But I think the threshold of like saying, okay, you are guaranteed at least this much, regard in worst case scenario. Okay. So at least I think that's a good way to define it and a good way to measure it, saying that, okay, if things do go bad, what is the minimum amount of return I will get from this? I think looking at those kind of figures provides at least not a false sense, but it gives you a general sense of, okay, even if like I put in this much, I will still get this much, And I think, again, we're operating on human tendency and human mentality and saying like, okay, fine, you know what? I'm okay with this much. But are we really though? Like that's the thing, right? Are we really okay with that much? And that's the thing. But for me personally, I think knowing that there is a bottom line that we can hit. And again, it's the same thing of who wants to be a millionaire. You can cash out at any point in time, right? And I think that is probably something for me as a blanket to know that, okay, sure, I can invest in this much, but if I choose to do something in a very, dire situation, I have to pull out my money, I'll know I'll get this much at least. So I know how much to hit.
So have you done your reverse calculation on your needs analysis, as we call it, that how much exactly you need in case everything goes belly up and I'm like, okay, I need to sustain myself over the next 3 months to 6 months till I land on my feet, get a new role in case of worst case scenario. So have you done that reverse calculation?
Yeah, of course. I mean, the easiest thing, like you can look at your major expenses and we look at the monthly expenses and the day-to-day expenses and how much income's coming in. And if you are married and you have you have children, I don't have children, but if you have children and we actually do the math from then on, and then comes the very tough question of either asking, say, for example, from a family connection, like, oh, hey, can I extend your lifeline by a certain amount of money? But then, obviously, then we have to take a very hard look at the kind of investments you made. And I can narrate a real life story, actually. This is like a very real life thing. Because my mother took a life insurance policy. Mm-hmm. This is, I think, about 20 years ago. And it didn't fully mature. But she needed the money. And she needed to make an investment ASAP. It was a good investment. And it was a real estate investment. And naturally, me being the signatory, it came down to the question, hey, I took a policy on you when you were like very little. And it's not fully matured. But she was very forthcoming because technically she made the decisions for all of this, right? And I think when those situations, especially these sort of situations can happen to anybody. Mm-hmm. And I think that's when you have to like make or break that choice. Like, hey, if I wait for at least 2 or 3 more years, I could have gotten this money. But then you have this either big investment to make or you have to like survive. You go into survival mode and you need any money you can get right now. I think those are your defining factors.
Okay.
And that's why, again, this is again from experience, I speak from pure experience, is that we don't know, and the pandemic showed us this as well, we don't know what's happening for the next 5 years. So how can we justifiably take policies on, like especially life insurance policies for the next 10, 15 years, right?
True.
That's the human mentality of it. I get it. I do understand the logic saying that if a tragic event happens, there will be a payout for your next of kin. But circumstances such as being they are, I'm not sure if people can be in that position to make that choice now. And that's, I think, one of the biggest challenges people, like ordinary people, are facing when it comes to like taking long-term policies.
All right. But wouldn't you agree if we say that, all right, once you've done a reverse calculation, I need to put aside X amount every month, non-negotiable. This needs to happen come hell or high water. Let it be in any investment, whether it goes up, it goes down, it doesn't matter. Ultimately, you have to make that conscious disciplined decision that I need to put this aside. So
Yeah.
would you say that that is actually the need of the hour, where people need to start diversifying from their income and actually sitting down, putting pen to paper, and doing a calculation? Because while kudos to you that you do know those figures, y- I've been surprised with how many people are just like playing it by the ear. They're like, okay, I know off the top of my head that my rent is this much, my utilities is this much, my loans and EMIs is this much. The rest, what remains, I just enjoy with.
Yeah, see, I think people suffer from the illusion of time because they only see what's ahead of them, what's in front of them. They don't see what's going to happen
Right
for the
now,
next
like
5
immediately, yeah.
or the next 10. And I think that's one of the major issues we have, especially with financial planning as a whole. And I'm guilty of that as well. Like up until now, having several connections to the finance industry, either through work or friends or family, that's the only way I have learned that I have now reached a critical point in my life that I can't obviously necessarily be in the industry I work in the media industry. If you people retire by the age of 40, like,
Wow.
that's the kind of money we're talking about here. And if you work beyond that certain time, you're now competing with children, literal children who are in their 20s, who are younger, faster, and work way more and don't have families to worry about. They are going to, that's the workforce we're talking about here. So naturally, the hiring during those age gaps between the next, 40s, 50s, 60s, where you're supposed to be C-suite level in your industry, if you don't hit that, you are necessarily competing with people way younger than you. So you're not going to have an opportunity to be in the industry. That's the cold hard truth. But if you're financially savvy, you have put your money in different industries. In, say, for example, you bought an apartment, you put it on rent. It's paying off your bills as we speak, and you can live comfortably in an ideal world. But we don't live in an ideal world. We will live in a realistic world where financial planning is something that comes because you're forced to learn quickly. And I think that's going to happen to a lot of people here as well, because again, Dubai's seen an influx of people, which is pretty good for everybody involved, but not necessarily for those who are coming in knowing what they're getting into. And I think that's one of the key things to understand here is that people see what's in front of them, but not necessarily realize, hey, will I get a job in 5 years in my industry? No one asks those questions. So then the next question is then, how am I going to make money? And I think that's a conversation that's needed to be had, because what are you doing with your money is then the follow-up question. And I think that's the question now I'm asking myself. What am I going to be doing with my money? And like, what can I do it so that I can make, when I'm sleeping, I can still make money? And I think that is now the direction that I'm going in. And I hope that, others obviously take that from me as well.
That pretty much hits the nail on the head, making money while you're sleeping.
Yeah.
Your money working for you, basically.
Exactly.
What would you, if you were to give Kevin advice from, say, 10 years ago, what would money advice be that you would give to yourself to Kevin from 10 years ago?
Having a very big bank balance means very little. If it's just like a figure that is sitting idle, that money could have been used to basically give you 10x or at least like 5x of that money. And honestly, in like investing in things, investing in like the market and the stock market and trades, is, while it's a gamble and while it's something that you have to be very well versed in, it is not a bad idea.
All right.
And I think, especially when you're looking at things like commodities or stuff like that, people are still using gold. People are still again, we live in a world where commodities are still being used, and investing in companies that work in these commodities are also not necessarily a bad thing. And I think it will also motivate people to be more aware of where they can put their money in.
All right. That would be a more risk factor play.
Yeah, I think taking more risks, but calculated risks, I would say.
All right.
Like, I wish in my 20s I had, a resource that told me, hey, you're earning this much right now, but you're not going to earn this much in the next couple of years, who knows what's going to happen? You know, we're talking about 2015, and 5 years later, we all know what happened. So I think that needs to be the need of the hour, where people like yourself or like, institutions like Continental actually be more aware. Like again, we see ads, we get phone calls bordering on harassment at this point, saying like, hey, we can invest in something. Because again, I think it's also the way you nudge people into that kind of zone, where it doesn't come across as oh, I'm going to benefit by you investing in this, rather than how can I see you reach your financial goals for the year, which is the approach, of course, I know you all take. But I think that would have been very nice to have had in my 20s. And I think people in their 20s now need to also look into that seriously, because I'm not 100% sure that they are into that space, because with every generation, I'm starting to see that financial education has taken a dip. It realistically has taken a dip. At the same time, however, a select few are now going on Reddit, on Wall Street Bets. People are actually getting educated about this. Again, the GameStop thing, the GameStop stock short. And a lot of people who invested during that time are 20-year-olds. People who realized, oh, I can actually make money off this. We all know what happened at the end, but they still made, some people still took the payout. Some people still made money off that deal. And I think I would like to say I'm cautiously optimistic that, people are now starting to realize the way things are working. And hopefully we will see a time where conversations about money become way more accepted and not necessarily shunned, just so that, we protect people from, not investing.
Right. But it ultimately brings to the point where, due to this lack of awareness, due to this lack of financial literacy, as we call it, don't you think there's a certain preconceived notion where, oh, okay, if I'm going to invest, I'm going to become rich overnight or tomorrow or by next week? That get rich quick, get rich really fast mindset that I have seen prevalent. Do you think that might actually be a driving and motivating factor, or do you think that's actually leading people down the rabbit hole where they get scammed on a daily basis?
I think it's a bit of both, because there are some people who are very savvy, who use very specific amounts of money, disposable income that they can use to essentially say, oh, I can make this income work for me. But then there are others who go like the Wall Street thing, like the Wall Street Bets thing, who go on Reddit and then be like, oh, I will make $500,000 tomorrow in like a click of a button, just because I invested in a meme coin or a meme currency online, and then only to see that you essentially lost a perceived value of 900,000, even though you made it shows you a number, and then the number has dropped literally hours after you made that announcement, telling people, oh yeah, I'm close to being a millionaire. So I think it's, again, human motivation at the end of the day. So the people who have, made calculated risks are those who are already in that space. And I think when people are starting to invest in it, they don't really tell people that, hey, I'm putting money in this, obviously. And I think people should be more forthcoming about that, because you can actually have someone tell you, hey, maybe don't invest in this. It doesn't sound like a foolproof affair. And I think that's what we need more of, like actual advisories saying that this is a terrible idea, save your money, don't go into debt for stupid reasons. And I think that's the thing, because on Wall Street Bets, they never tell you this. They just tell you that, yeah, we're going to hold. And then you hold, and then you have nothing. And we've seen people lose their life savings on this. And
college funds. Savings.
Yeah, exactly. And it's a very serious problem to have, because you are now trusting the wisdom of the internet for your finance and your long-term survival, which is a foolhardy thing to do, in my opinion. But it happens.
Yeah, true. It does.
It happens. I've known people in real life who have done similar stunts, and the only people they have to blame is but themselves. And I think that is where the cautionary tales start coming up, and then it creates a feedback loop where we don't want to invest in because this happened to this person because they did it in this way. And it creates a sort of, I would say it creates this air of distrust that investing in something is not for beneficial purposes. It's just to fundamentally improve another person who's making money off your money.
True. Yeah.
And I think that's the air of distrust that needs to clear up, saying that, okay, this is how the world works. And I think that's the whole point of having advisors to begin with. Like you literally pay someone to tell them how to manage your money and your portfolio. And I think a lot more people are doing that now. Not enough, but a lot of people are doing it now.
True.
But again, the conversations about that, because the very nature of money is that people don't talk about money enough in regular circles. And I think those conversations are changing now. And that's a good thing, because I'm now reaching a stage where I'm having conversations with teenagers saying, hey, did you see the NVIDIA stock crash? And I'm like, wow, are you keeping track of this? They're like, yeah, because we want to know if we can afford to buy a gaming PC.
That right there.
And there you go. So that the motivation comes through a third party. And that comes to my final point. Like, I think money is the means to an end. And people are now focusing on the end more than the means.
All right. Yeah. Because this is so true.
Yeah.
My nephew just the other day was telling me, oh, did you see what happened to NVIDIA?
Yeah.
And I should have waited a little. I could have gotten a cheaper graphics card.
Exactly.
I'm like, it doesn't work that way. But yeah, maybe a couple of months down the line. But no, ultimately, they are keeping track of it. They know what's happening.
It's not necessarily. It's no longer about, hey, my dad's credit card will pay for everything.
Correct.
And true. I think that's the generation we're hoping to raise. And I think we're getting there. It's the start of a smarter generation.
All right. And I would be remiss if I didn't ask, what is your take on insurance, life insurance, for example? Since we are talking money, that's a huge contributing factor.
I do think it's the need of the hour. It's always good to have something like that.
Mm-hmm.
At least, from an accident perspective, because accidents can happen to anybody. Anyone can essentially have a terrible illness. And we all know, again, if someone has an illness, insurance companies suddenly, if you're undercover, you're good. But if you're not undercover, and medical industries of late, especially in the US, we don't need to get into that conversation. It's also far too much of a tale that's been told. In my opinion, this investment, like my mom took an LIC policy on it. It's a life insurance corporation of India. And she used that essentially to take a policy on me, but it still came in handy much later on because that investment paid off.
Correct.
And I think people need to really look into it, because whenever we look at our lives, we see them as such fleeting moments. We don't look at these other, things that we don't want to talk about. And depending on what kind of policy you've taken, for example, it can obviously scale up in value. And I genuinely believe that if I had the means to do it on my next of kin, 100%, take a policy either on me so that if something were to happen to me, they would at least be covered. And I think that's the kind of mindset I'm lately have been in.
All right. That's good.
Yeah.
Anything you want to throw towards me?
In terms of questions, I think only one really.
Mm-hmm.
I think one of the pain points of this entire process of taking someone to an advisory plan is we don't even know where to start. Right? It's easy. Call up the company, call up the advisory, but then how would you tailor a policy based on a person's industry, on their net worth? How do you make this calculation? How do you decide, okay, this is the best policy for you? What are those mechanics? I know it's a whole long-winded process, but how do you make that judgment call on what policy that we should be taking?
Okay, so it basically starts from understanding you.
Yeah.
Understanding what your lifestyle is, what your current financial needs are, as opposed to what your financial needs in the future may be. On paper, we account for inflation, we account for anything going wrong, how much percentage should go in that. But yes, black swan events happen where everything can go topsy-turvy. The only key driving factor that I will tell you works is patience. That's it. You trust the process, patience, because think of it this way. Before the 2008 crash, which was the one before COVID,
Yeah.
before that it was a Y2K, and so on and so forth. Before that it was the Gulf War. These black swan events have happened. Markets have tanked. Has the price of, say, for example, Apple or Microsoft or any of these remained steady or gone further down over the last 2 to 3 decades? Or has it only gone up? It's patience. Name of the game is patience. You trust the process, make sure that I've committed to this much, this is what I need to put in. If I need to access it, it has to be in extreme circumstances, not, oh, there's a new phone coming out, so let me dip into it, or, oh, I would really like to put that down payment on a new fancy car I saw. Things like that is not emergency and extreme circumstances. So my advice is that when that process does happen, we sit down, we understand you. The solutions are tailor-made to you. It is taking into account any and all scenarios, and then we give the advice that, look, this is what works best for you. But it's like a doctor prescribing medicine, and the medicine needs to be taken, right? The doctor is not going to come home and tell you that, oh, did you take your medicine? No, there doesn't need to be momming when it comes to this. It has to come from that if I want to get better, I need to take XYZ medicine to get better. The same way, if you want your finances to get better, you need to implement what the advisor has advised you to do and trust the process. It will happen. That's it.
Okay.
All right, Kevin, this has been highly informative, very insightful, and thank you. Thank you for coming today, and thank you for sharing your valuable thoughts.
Thanks for having me again.
Always a pleasure.
Thanks.
Thank you.